What's going on, everybody? My name is Zach Hartley, and today we are starting a $10,000 trading competition with Horizons ETFs. And so in this video, I want to walk you through the details of the competition. I'm going to show you and lay out my entire strategy, including the two scenarios that I'm considering, and I'm going to walk you through how to use the platform that we are trading on for this competition. So without any further ado, let's jump right in. Okay, so when it comes to the rules of this competition, it is a $10,000 grand prize and a $5,000 second place prize, and then they're also giving out $1,000 per week to whoever has the best return that week. So lots of money at stake here, really, really exciting. The competition runs from May 15th to June 23rd, and it's free to sign up. You can only trade TSX listed ETFs though. You can only put a maximum of 25% of your portfolio into any one ETF. When you sign up, and I'll put the link in the description to this video, and it's also in my bio if you're watching this on another social platform, but when you sign up, they will give you $100,000, and whoever can invest and trade that money for the best return at the end, that's who wins. Very, very exciting. Now, on your trades, there is no commission, but you cannot short sell and there's no margin. You can trade up to 5,000 times though, so day trading is totally permitted, and like I said, it is totally free to sign up. Now, when it comes to my strategy, there's a couple of different factors that we really need to consider here, because these factors make it different than trading the normal markets with your own money. Those factors include the fact that this competition is only 6 weeks long, so you have to be fairly aggressive. We are only trading ETFs, so that puts a big limitation on the securities you can trade, and there's no chance of losing money. So the reward here is $10,000, and the risk here is a couple of hours of your time. And so the risk to reward ratio is absolutely crazy for this competition. You have no reason not to sign up for it. And I'm very excited about it because the only thing you're going to lose is 2 hours of your time, and the upside is $10,000. And so that also makes me want to trade a little bit more aggressively. And so this isn't going to be a competition that's completely representative of your actual trading results, but it could be a great opportunity to get into ETFs, learn about them, get familiar with some of the products, and make a name for yourself and earn some money. So I'm very, very excited about it. Now, when it comes to my strategy here, I have a couple of opinions, and this is just my opinion, but so take it with a grain of salt. But number one, I'm going to use large positions. I kind of want to maximize that 25%. I'm also going to focus on short-term trends and technical analysis, and I'm going to try and find the trends and the catalysts that are going to move the market, and then an ETF that will benefit from that move. That's my idea here. So I'm looking for short-term trends and catalysts that will move some part of the market, and then I want to buy the inverse of an ETF that will benefit from that move in the market. Now, some of those trends and some of those catalysts that I'm watching very, very closely here are high interest rates in the United States. We have seen several banks collapse in the last few months in the United States. If that spills over to Canada, or if it starts to have more negative effects, that could be a big damper on certain industries here in Canada, and there's lots of ways to take advantage of that through these ETFs. Next one here is the US debt ceiling. If the US cannot raise their debt ceiling, it means that they have a possibility of defaulting on some of their debt, and that would cause a lot of turbulence in the financial markets. So again, another opportunity for us. If that scenario plays out, we can take advantage of that using the ETFs. Next up here is cryptocurrency. Bitcoin has been one of the best performers so far in 2023. If that continues, there's lots of ways to take advantage of cryptocurrency, or if it declines, you can take a lot of advantage, even leveraged advantage of the decline in crypto price using ETFs. So it just depends on what direction you think cryptocurrency is going. So far in 2023, it's going up, but we'll leave that to you to decide. Also, gold is very, very exciting right now. With the collapse in some of those banks, people have gone back to the safe old tradition of buying gold bars. That has driven the price of gold up to all-time highs around $2,050, which is the exact same level that we have been rejected at now 3 times in the last 5 years. And so gold is at a very key level where it is either going to get rejected and come back down, or it is going to break out and set all-time high prices. So I'm very, very excited about watching the gold price. We also have an expectation of declining energy prices like oil and natural gas, mostly due to a slowdown in economic conditions caused by higher interest rates and inflation, but also here in Canada caused by wildfire threats in the areas and the regions where we produce the most oil. And so that could have a very large and negative impact on the oil and gas industry here in Canada if it continues and grows. On top of that, we legalized a new industry back in 2018, and very few companies have been profitable in that industry, and we're getting more and more news of write-offs and layoffs and shutdowns, and so I think the entire industry has been a bit of an embarrassment, and I think it's going to continue to decline. So that's a trend that I'm watching. And then WestJet, which is a major Canadian airline here, that's having some issues as well. So the airline industry here in Canada is another sort of trend that I am watching. Now, when it comes to taking advantage of these trends and these catalysts, you have to mix it with your trading style. Like I said, for me, I'm going full position size. I want to be all in on a couple of trends that I'm very confident in. I do also want to get out of losing positions quickly. So for this competition, I'm going to be using a trailing stop loss. And I also want to try and maximize returns whenever possible. So I'm going to try and use leveraged ETFs whenever I can. A leveraged ETF is basically going to double or triple the loss or return of the underlying ETF. So if you buy a leveraged ETF that tracks Canadian banks, and there's also a regular ETF that tracks Canadian banks, the leveraged ETF is going to give you twice the gain or twice the loss on that day, depending on what you have bought. And so a leveraged ETF basically just increases your returns, and it also increases your losses when they occur. And so the ones that I'm going to focus on here are through Horizons, because they have this section of their ETFs called the Beta Pro 2X Daily Bull. And they also have the exact same thing for bears. And so basically these are bullish ETFs for energy, financials, gold mining, marijuana, and etc. And then they also have the exact same categories here that are the inverse. And so if you think that energy is going to go down, you don't want to be buying the bullish ETF. You want to be buying the inverse ETF so that when energy goes down, you are making money in your account and getting closer to winning that grand prize. And so Horizons is really nice. They have both the bullish and the bearish, or the inverse, I should say, ETFs, and they are leveraged by 2x, meaning that these ETFs will give you the result that is 2 times greater or twice as great, whether it's good or bad, as the underlying ETF if it was just tracking capped energy or financials or gold miners. And so that's how this works, and this is where I am going to try and trade. These are the securities that I'm going to try and trade, both the inverse and the regular leveraged ETFs, so that I can take advantage of those trends that I just pointed out to you. Now, when it comes to what's going to happen over the next 6 weeks, I think there's basically 2 scenarios that can happen. Number one is things go very poorly. And what that means is that high interest rates continue to cause more banks to fail. In Canada, the next interest rate announcement is June 7th. And in the US, it is June 14th. That would be a major issue if more banks continue to fail. It would put more stress on the economy, it would put more stress on the financial network, and probably more people would be shifting some of their money towards gold and Bitcoin. And so that is something to consider. If the US debt ceiling is not raised, that is also going to cause more tension, and international tensions could also rise between US and China, or Russia, Ukraine. Any major events there would be considered bad. And in this scenario, I would be wanting to buy Bitcoin, I want to buy gold miners, I want to short the banks, and I want to short the S&P 500. The reason that these would be my trades is because when there's uncertainty in the market, I think people will flock to gold. If the banks start collapsing and the traditional money system starts to fail, I think people will shift to cryptocurrency. When the banks start to fail, nobody's going to want to hold their stocks, and the general market is going to lose confidence, so people are going to sell out of the S&P 500. That is my scenario number one and situation number one if things go poorly over the next 6 weeks. Now, scenario number 2 here is, let's assume that things go really well and the Bank of Canada holds their interest rates steady, and so does the US, and they also come to an agreement about the debt ceiling and the international tensions decline, or at least nothing flares up. That would be what I would consider a good situation, and in that scenario, I think the US technology stocks, specifically in the NASDAQ, are going to do extremely well. I think the banks will have a nice recovery. I think the S&P 500 will continue to do well. And I still don't like the cannabis industry, so that would probably be my short position, where I would buy the inverse ETF in the cannabis or the marijuana industry. And so this is sort of scenario 2. As of right now, I'm leaning towards scenario 1. I don't have a whole lot of confidence in a couple of different aspects here, but I could be totally wrong. My opinion could totally shift 1 week into the competition. Who knows? But these are sort of the 2 scenarios that I'm playing with. Now, how do we actually put this into effect? How do we make a trade? How do we actually spend that $100,000 that they're going to give us? Well, here's what you need to know. Number one, link is in the description to this video or in my bio on social media. You need to register and then you need to log in, and then this is what your trading page should look like. As you can see, you've got $100,000 in paper money right at the top here, and now in order to make that first trade here, we're going to come down and click on this trade button. Now, at the top here, you're going to see all the different ETF providers, and what you need to do is choose the ETF provider that you want to buy their ETF from. For me, most of my trades are probably going to go through Horizons, so I have that selected here, and then I want to come to select symbol. Now here are all of the different ETFs that Horizons provides, and for me, I need to scroll down to the gold miners 2x daily bull ETF. So that's HGU, that's this one right here, and this is going to give me a 2x return on the Canadian gold miners ETF. And so that is the first thing that I'm going to click. As you can see right now, the last price was $17.69. So now I need to enter in my quantity, 1,400 shares. So that's what I'm going to use. Now, for me, I'm going to always use a limit order whenever the bid and ask is more than a couple of cents. As of right now, this bid and ask is only 1 cent apart, and so using a limit order isn't really going to make all that much of a difference. But if this bid or ask was 5, 10, 15 cents apart, that's when you really want to use those different types of orders. For us, let's just do it for exercise sake. 17.69. 14,000, and the duration is going to be set as good for day. If I was using a trailing stop loss, or if I wanted this order to stay active for longer than just today, that's when I would use the good till cancel or the good till date. But I expect this order to fill right away and basically execute. And so now we are going to click on preview. As you can see, it gives me a summary right there. We're going to click on preview. It's going to basically give us everything here, and then we're going to click on confirm. Your limit for buying shares of HGU has been accepted. It has been sent to the marketplace, and now I can view my order history and I can see how that order is doing, and the status right here, as you can see, is already filled. So now we have executed our first trade and we have taken a position. Okay, so now that we're in the trade, the next thing I want to do here is manage my risk. As of right now, I do not have a stop loss on this trade, so that is something that I definitely want to have. And for me, I want to do maybe a 10% stop loss on this. I want to give it some room to move, but I don't want it to get stopped out right away. And so for us, we're going to use a trailing stop loss as a percentage. I'm going to put it to 10%, and instead of good for the day, I want to leave it as good till cancel so that this stop loss continues to stay there and it continues to move up as the price of this ETF actually moves up. Now, I'm going to click on confirm. It's going to give me the estimated cost and everything here. Let's just make sure we have the right quantity of 1,400. We do. I'm going to click on confirm here, and now it has accepted my order. And if we go to view order history, this order should be open and not filled. And as you can see, there we are. So now I have a 10% trailing stop loss on my first position, which is a gold mining bullish ETF. I'm very excited about it. And if you guys are interested in joining this competition or competing against me and trying to win that $10,000, again, the link to sign up is in the description to this video or in my bio on any social media platform. Now, if you're interested in learning a little bit more about technical analysis and how to actually understand these charts and how to actually make these trades with a little bit more confidence, definitely check out my totally free stock market fundamentals course. It's hosted on Skillshare, and the link is also in the description to this video. You get 1 month totally free where you can take the entire course. There's over 14,000 students that have already gone through it. There's over 400 reviews for you to read through, and over 2 million minutes of watch time has been spent on the course. It's only 10 hours long, so you can complete it in a weekend, and I promise you it'll be the best free resource that you can find online. Thank you so much for watching this video, and I will see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.